dovish tone as we approach that date. We're seeing inflation really come down significantly. Maybe we don't have the government statistics, but we do have the bond market, which is helping us understand that as measured by the 10-year Treasury yield, the inflation expectations have been coming down for the last few months. We're in roughly the 2.5% range on that metric. Same is true for Trueflation, which is a real-time indicator, 10,000 items monitored, tens of thousands, I think it is, monitored in real time. And that metric is at roughly 2.5%. Now, it was down to roughly 1.5%, has come up here. Tariffs, of course, are a big reason. We think tariffs are going to wash through as well, and some may even come down. I think the administration is taking the election results, New Jersey and New York, for oil prices to continue falling. Housing prices and shelter in the CPI is roughly 40% of the CPI. Housing prices, new home prices have been falling for roughly a year. Existing home prices or home price inflation is down to 1.5%. And that will get into the CPI over the next year. And then finally, we're seeing a lot of technology indicators, and this is our bread and butter. The metrics we follow and the original research we do suggest that the undercurrents of deflation associated with new technologies evolving are building. And we would not be surprised to see a real break in inflation once the tariffs have passed through in the next year. Now, the burden of proof is on us. We don't have the government employment indicators, but ADP is out, and month after month now, they are saying that employment is either contracting or expanding very, very slowly. And we're also seeing new graduates. That unemployment rate is increasing more rapidly than any other cohort's unemployment rate. And I think the duration of unemployment for everyone is approaching 30 weeks. So these are indicators that suggest that the velocity of money it has already flattened out, and we think it will go down on a year-over-year basis. M2 right now is up 4.8%. If the velocity of money falls on a year-over-year basis, that means nominal GDP will
received from our clients, our distribution partners, and sent to our Funds X account and Instagram account at ARK_funds. Cathie, so I'm going to come back to you on the first one here. No surprise, we got a lot of questions on this. It's the topic of discussion this month on every media outlet. So just, Cathie, are we in an AI bubble?
I love this question. And the reason I love it is many people are worried about that risk out there. And this, in comparison to what was going on in the tech and telecom bubble, is night and day. In the tech and telecom bubble, sure, you had some value investors saying this doesn't make sense. No one was listening to them. And you had growth in them. And yet, on the consumer side, it is flourishing. So I think that bifurcation is something, that we think about a lot. But if Palantir is any indication, and we think it is, you have, CEOs and strategic decision makers saying, we've got to do this or we're going to lose our competitive edge out there. And that's why U.S. commercial business was up 123% last quarter, far surpassing anyone's expectations, including our own. There is a strategic imperative now, and it will take time. It will take time to play out in terms of those productivity measures. Individuals are seeing big at 3%. So that was a 5-fold increase in the growth rate. And here we are saying 7 to 8%. To us, that's conservative given the kind of technology revolution we're in. We've never seen
the portfolios.
And if I could just put in a plug here, ARKK, the flagship, touches all of these areas with some of our highest conviction names.
Of course. Thank you, Cathie, Tasha, and the rest of the team. Shifting here a little bit, but staying kind of big picture, I want to have this next one for Brett. So there's an interesting article on Bloomberg this week published, and it kind of explained the growing conversation among institutional asset allocators shifting from a very traditional, kind of a more rigid way of allocating their assets with a strategic asset allocation framework, shifting that potentially to a more
where the risks are in their private allocation. So we think that the rush by private credit and private equity into software as a service, for example, is a mistake. We think software as a service is being disrupted. Of course, there are going to be some winners, a little bit like in retail. Walmart and Costco have accommodated the shift toward online. There will be some winners, but there are going to be a lot of losers. And I think it will become more apparent meaning the individuals in emerging markets whose wealth and purchasing power are destroyed regularly by bad fiscal and monetary policies or by corruption. And that is not happening. However, what is happening at an accelerated rate, interestingly, is the scaling of stablecoins, which I think have scaled to nearly $300 billion. And the other side of that is this has become a natural buyer for U.S. Treasury securities. As China and other countries are diversifying away from the dollar, we've got a big force here, and we think it's only the beginning.
So CRISPR's therapy is a one and done approach. It could compress decades of therapy into just a single treatment and has shown early signals that it could be as beneficial or more so than traditional care while reducing treatment burden. And what I think makes these results even extra compelling is that these participants were already on the best available treatments, and yet a single dose of this therapy, CRISPR's therapy, drove an additional 50 to 80% drop in lipid levels. And it shows that even well-managed patients have significant residual risk. So if these results hold up in larger trials, such as gene editing, and must stay on therapy indefinitely. If Intellia's results hold up in the ongoing phase 3 trial, which results will come out in the middle of next year, then Intellia's therapy would represent a step change in standard of care, moving HAE treatment from expensive chronic management to potential one-and-done solution.
Fantastic. Thank you, Shay. Great timing having those this week and on right before the recording. And so with that will conclude our webinar today. We'll briefly show performance statistics